Hey, good morning, everybody. Welcome to the last trading day of the first quarter of 2019. Hard to believe we've made it through the first quarter, and Monday starts the second quarter of 2019. So, hey, Dave will be with us momentarily, and looking forward to a great conversation this morning.
Point 7 Light FM for L. Williams, morning day, 8:39. Okay, the sound of the cash register opening indicates it's time to talk about your money, and that's what we're going to do right here. Find out what's going on Wall Street. Let's head downtown to the offices of Statler Financial Services. Phillip Statler's standing by. Phillip, good morning. How are you?
Good morning. Hey, doing well today. How about you?
Not bad at all. It's a gorgeous Friday. Sun's out. I get to play golf tomorrow morning. All's right with the world. I can't complain in the least.
And it is.
You guys, on the other hand, are in the tax season, so I'll bet you're working, aren't you?
Well, yeah, working, and then trying to get over last night's loss, and this is the end of the first quarter of 2019. So, hey, a lot of stuff happening.
That's true. Well, let's get the really serious stuff out of the way first. The Noles lost to Gonzaga. I mean, there are worse things to have happen to a program.
Well, there are, and if you watched it, you know that they were just off terribly last night and just couldn't hit the broadside of a barn for most practical purposes. So, but it was a good season, and they did hit some records. They actually had the most wins they've had in any season. So.
That I didn't know. I'm kind of a systems guy when it comes to college basketball, and I just remember when Gonzaga was the Cinderella team. Nobody expected to do anything, and now they're going into a regional as top seed, and it kind of makes your head bang against the wall. This little nothing school out west all of a sudden is a tremendously hot basketball power, isn't it?
Yeah, they really are.
Yeah, Knowles kind of hit a buzzsaw, and they made the mistake of drawing the top seed. So good season, Knowles. Congratulations, Florida State. Now on to the stuff we actually get paid to talk about, which is finances. Yesterday, not a bad day. We were up by about 1/3% on the Dow, a little more than that in the NASDAQ and the S&P. Green ink for the day. Nothing scary big, but it was a good day. We're starting out this morning with kind of kissing your sister data. Consumer spending was up by a little bit in January. Incomes were up by a little bit more in February. Any of those pleasant or unpleasant surprises in terms of our consumer economy?
Well, both of them are slight misses. Personal income was expected to rise by 0.3%. As well as personal spending was supposed to go up by 0.3%. And so I think of the spending, if I remember right, came in at 0.2%, and personal income was only up 0.1%. So some slight misses there.
Okay, I've considered any increase good news given the way we're slowing down. The talking heads on on CNBC and all of the financial news sources are talking about the inversion in the rate curve, and that's going to augur something for us as time goes on. Yesterday evening at the close, the 3-month Treasury bill was yielding 2.38%, and the 10-year Treasury bill was yielding 2.37%. That's the first time I've seen them actually cross, although they got down to tying yesterday in the yield. That kind of indicates people are buying the 10-year bills like they were chiclets. And you were looking at some overseas numbers that indicate we're getting a lot of money in from overseas as well, right?
Well, I think that could be driving some of it, Dave, because if you look at the yields overseas, Germany's yield is negative. Japan's has been negative. And so we got that European area where those people over there would buy their own government bonds. Well, now they're seeing that their yields are negative, and they're looking for some positive returns of some kind. And so they're looking to the United States. And so that's part of it. And then the other part is that, let's face it, people are just moving out thinking that our economy is slowing down. There is some concern about whether or not this stock market can keep going at the rate it's going. And so we're seeing some people move out of that stock market into the bond market, and they'd rather have a small yield than a loss. And so that's what they're looking for.
I was going to say the simple way of putting it is folks would rather get guaranteed nothing or close to it than see the risk of a loss. And the problem is when you start looking at a negative yield, you're buying a bond and you're guaranteeing a loss. So better to come over here where you get next to nothing, right?
Well, yeah, that's true. And though it doesn't mean they won't lose money in the bond market either, but at least they'll get paid for sitting there waiting.
Absolutely. Like I said, absolutely nothing beats the brisk of loss. The other number that comes out kind of interesting because we've been working so hard in the Federal Reserve to get a little inflation up. Producer price inflation, actually, they're now reporting it down 0.1% in January. Core was only up 0.1% once you get rid of that useless little stuff like energy, gas, and oil and the like. We just can't seem to get prices to go up either in this country, which kind of makes the Federal Reserve sit back and say, what do we got to do here?
Yeah, exactly. And so that is a little short too of what was expected. Core PCE inflation was expected to come in about 0.2%. So again, falling a little bit short on the numbers.
Okay. Everything is just a little off. It's kind of like catching a cold. It doesn't look like it's disturbed Wall Street too much this morning. Any of the issues that we buy and sell on the market showing any good news?
At this point, no. I mean, I'm seeing that everything's looking up. All the indexes are heading to the green side of everything. So I'm not sure exactly why. You and I've talked about this before. There's just no rhyme or reason of why things are happening.
That's one of those days I'd expect more red ink than I'm seeing this morning. How about the individual stocks? I know you had a couple of reports.
I did. I had a couple interesting ones come out. CarMax reporting right here at the end of the quarter. They beat by 9 cents a share. Revenue was a little bit below what the forecast was, and their same-store sales were up about 2.8% compared to a year earlier. So some good news there for CarMax. They're trading up a little over 5.5% this morning. We have BlackBerry. BlackBerry, yeah, the dinosaur.
Yeah.
They beat by about 6 cents a share. Revenue top forecast, and they said they hit a record for both the fourth quarter and the full year. Now, we don't have any pricing on them because they're not traded here in the United States. They're a Toronto Stock Exchange company, so we don't have any futures on that right now. But still, some good news there for them.
Yeah, they must have sold 10 phones or something, huh?
And the last one I have is Restoration Hardware. They came in. They beat. They came in at $3 a share. They're expected to come in at $2.86, so a pretty good deal there. Revenue missed, and they cut their full year earnings forecast, saying that they're having some issues. High-end housing market is starting to falter a little bit, and so they're trading down about 14.5% this morning.
Holy crud! Guidance will still kill you even when you're a late reporter, doesn't it?
Yeah, it is. And Lyft, the initial public offering came out yesterday at 72. And so they, that's going to be the main news, I think, today.
I was kind of curious. Are they offering? They actually offered up for trading when? Does it start today?
I think so.
Okay, 72 is the starting price, and generally with IPOs, it skyrockets for the first couple of days while all the original stockholders get fat and sassy, right?
Yep. Actually, yes, it says it starts trading on the NASDAQ today.
All righty, sounds good. So we're about 45 minutes before we start throwing real money around, Phillip. Which direction are we going so far this morning?
Well, we are still heading in the upward momentum. The Dow's up about 122 points. The S&P 500 is up 11 3/4. The Nasdaq's up 33. So everything's a little bit above 0.4% up there. Gold and silver are heading up also. Gold yesterday closed below 1300. It's back up over 1300 this morning to 1301.70. And silver's at $15.10 an ounce. Crude oil, though, unfortunately, up 1.8% this morning at $60.41 a barrel.
I saw that 6 in front of the number, and my heart kind of fell because my gas tank's on only a quarter full.
You're going to get the high-price gas, Dave.
I think we are. Overseas markets mostly green, both across the Asian rim and in Europe this morning. In pre-market trading, anyway, things are falling a little closer to being in order. The 10-year Treasury yields are going up. Might actually put them in the proper order for today, anyway. Phillip, somebody want to turn this into useful information for our retirement ahead, whether it's 10 years or 20 years in the future. How do I find you on the phone?
Dave, give us a call at 382-0037. Follow us on our website at statlerfinancial.com, and then join us on Facebook. Like our page, Statler Financial Services, where we post a lot of different videos up there and some good information. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings, and streaming live now. And I need to get the website down, Dave. What's that website?
Newstalk730am.com. We're repeating it about 3 times an hour these days on all our radio stations.
Good deal. I really appreciate that. And I will talk to you, well, not tomorrow, but Monday morning, bright and early.
Unless you call me on the golf course, you aren't going to find me tomorrow, Phillip.
See you then.
Have a good weekend, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop it. As Dave and I talked about, it is the end of the quarter as far as the markets are concerned. At the end of the day, that'll be the end of the quarter, and they'll be marking that time and that point to determine how well this quarter actually came out. So, hey, again, if you are concerned about your retirement, if you are 5 years out from retirement or you are already retired, hey, click the link above, schedule a 30-minute phone call, an hour office visit, and we can chat about your current situation. Schedule a time to do a financial x-ray review, or pick up the phone, give us a call at 382-0037. We'd love to sit down with you and make sure you're on the right track. Take care. Have a great weekend.